back to the now sixth episode of the Pediatric Practice Management Media Cast. We've got a special guest today who I'll introduce in a second. We're pretty excited. I think it's actually going to work technically today. We've run into some problems in the past. I've got, first of all, Brandon with me. Brandon, say hello.
Hey, Chip, how's it going? So excited about today, having our very first guest, and on a topic that I need to learn a lot about. So I'm very looking forward to this discussion here.
Well, I'm going to hand you the keys and let you drive the car in a minute because I know you want to grill our guest. I just want to introduce him briefly. I'll let him introduce himself. We've got Paul Vanchiere with us. Paul, introduce yourself briefly for me, please.
Hi, my name's Paul Vanchiere. I live in the Houston area, and I've been working with practice management for 15 years, most of that in pediatrics, and I appreciate the opportunity to join y'all. It sounds like it's going to be a fun time today.
All right, great. Well, one of the reasons we invited Paul, their number, is because Paul is spearheading a pediatric practice management, a series of seminars across the country, including one in New York City in June that I'm hoping to present at, and I think it'll be in New York City, New York City and Chicago and a few other places. At this point in the video, I'm going to put right there. I'm going to put a link that you can go to see. Learn more about those classes. You'll get to see some of the subjects Paul's going to teach about, including one that we're going to discuss today, right now. And you can learn about the other instructors. I'm personally really excited that Paul sort of resurrected the practice management seminars. Many of you know that PCC did them for a long time. Brandon helps us. We know one of the reasons Brandon and I do this whole project is because we know people need this information, and clearly Paul's in the same boat. He visits practices and sees how much help they need. So what we're going to discuss, and Brandon, I'm going to have you drive this, and what we're going to discuss is setting budgets in a pediatric practice, what that means, how it's done, why it's important, how that can affect you. And I know with Paul here, you have an expert at this. I want you to beat him up for the next 20, 30 minutes, get what you need from him about how to run your practice a little better. So go for it.
Yeah, budgeting, I hate to admit it, especially with my background, but I'm not that great of a budgeter. And in the past, I've taken budgeting different ways. It's not that I don't do them, but I think that I could do a lot better with them. And in the past, I've been, I'll do like a yearly budget just because it's just something that we kind of have to do and kind of get my ducks in order. But I very rarely visit them throughout the year. Lately, however, things have changed here in the office, and of course, we're definitely being a lot more, careful with the money and stuff. And I'm like, you know what? I need to take a better look at this. So what I was hoping to do today is talk to Paul, which obviously we are now, and to kind of get his idea in terms of how to help us with that. Because my guess is that there's a lot of practices like mine, especially the smaller practices, that don't really know. Because I don't know if there's necessarily a course out there that specifically shows you how to do budgeting for your small practice. So so Paul, could you in terms of kind of wrapping our heads around this, where does one begin? Is it just simply putting all your expenses down on paper and adding them up and then hoping that at the end of the year you have more than those expenses, or is there a method to this madness?
I think the most important thing is to sort of desensitize things, and you have to realize that in a pediatric clinic, as much as they love taking care of children, they need to think of themselves, the physician, as a machine, and a machine on a production line. And if they can get into that mindset, they can more effectively budget their operations over the next period of a year. For example, if you have a factory that is making a product, and for whatever reason, there is a step along the way that limits your ability, your throughput, that is your maximum capacity. So within a practice, you can sort of extrapolate that very brief scenario and say, where is my throughput governed? Is it the physician preference of their scheduling? Is it because they start at 9, they take a 2-hour lunch break so that the staff can get things done, and they stop taking more patients by 3:30? They need to look at the scheduling, and 99 times out of 100, The scheduling is what drives the revenue side of the practice. A lot of people think.
Paul, you're throwing a little curve here. I need to dig into this because scheduling. What does scheduling have to do with budgeting? Explain that for us.
Well, you know that the scheduling is what controls your flow of your patient, and your flow of the patient is what governs the revenue that you have the ability to bring in. For example, if you have a pediatrician who is only seeing approximately 15 to 20 patients per day, there is an inherent limit in her ability to generate income. Conversely, if you have a physician who's seeing 28 and more patients a day, then they have the capacity to generate more revenue. And so I know sometimes pediatricians, their feelings get hurt. I'm not a machine. Well, that you sort of have to take it that approach when you're setting up a budget.
Right. So I was going to say, sorry to interrupt, but and forgive me because I'm very giddy here. This is all very good information on how you started. So it sounds to me that one of the first steps in terms of getting started is looking at the revenue as opposed to looking at the expenses. Is this what I'm hearing?
Exactly. Because, you know, if you ever look at a financial statement, there's a reason that they put revenue first and then expenses.
All right.
You want to say, this is my goal. And your goal first is to generate revenue for the practice.
All right. Excellent. Chip, I know that it sounds like you want to jump in here. When you visit practices, do you find that people focus more on cost, or they focus on what Paul's saying here on revenue?
Oh no, I agree with Paul 100%. But I think one of the big problems that I see over and over again is that the practices focus on these little teeny tiny items on their budget. I know Paul's going to get into this, and I don't want to get into his good stuff, but I see practices spend hours deciding over what kind of supplies to order, when if the doctor had just gone into the exam room and done 2 more well visits, they could have paid for the problem the whole year. There was an example on soap women. I'm probably going to get someone mad at me.
Well, I'm going to cut you off, and I'm going to tell you one example.
Yeah.
The practices, they have all these stamp machines, and where they do the postage.
Yeah.
Well, I mean, it's not cheap to pay your rental on the machine, but I mean, I've been a part of conversations that were extremely lengthy on determining how much they're going to pay for the next postage machine. And it's like, shouldn't we be talking more about something that's going to be substantial? And that's the other thing, and to validate Chip's point, is that when you're having these discussions, there are certain things that should be left to the manager to tend to on a daily basis. When you're preparing a budget, the physicians are involved on the large ticket items, such as revenue, the single largest expense, labor, purchasing agreement. The physicians need to take the role in more of a visionary role and rely on the managers to make a good decision for the practice. And at the end of the day, you can come up with a laundry list of 50 items that's only going to save you $200 a month. And that's not very effective use of time. Like Chip said, that doctor could have seen 2 more patients that day.
No.
Yep.
So what was the example that you were going to give? Sorry to interrupt. We're a little bit of a delay here, Paul, but go ahead, Chip. You were going to tell me about...
There was an example on Soapum about a doctor who was really upset about her staff's choice to use the high-end toilet paper versus the I don't know, with the Costco brand or something like that. And I just read that and said, you've got the whole thing totally reversed. Get back in the exam room. The only way you will make money for your practice is in the exam room. All right, that's it. And so it drives me crazy. And I agree with Paul 100%. You have to start and look at your schedule. If you limit yourself to 15 visits or 18 visits a day, and I know a lot of practices who do, and that's not necessarily a bad thing, but right away you've said, the most amount of revenue from a realistic basis that I will ever generate is now set on this shelf right here. And I can't tell you how many practices I've worked with in the last year or two who've come to me to say, we're not making the money we used to, and then I look at their hours and they're open from 10 to 4, 3 or 4 days a week. And I said, well, you know, most of your parents work 2 jobs. How are they supposed to see you during working hours?
Yeah.
And so Paul, I agree with you 100%.
So, so okay, we got revenue down. So that's interesting because I would, you know, budgeting sounds like cost. That's basically what it is. So we've determined, you know, go first for cost and then, you know, figure out the later part. But you guys are talking about flipping that. So that's great. So I would imagine that that's not it, though. Revenue is not, you know, the only thing patient seeing or you know, money that comes in. What else are what would be the next step after that, Paul? What would you say would be the next step that we would have to look at?
So now you've determined what your capacity is. You've looked at your schedule. Now,
what is capacity? Oh, so scheduling is how do you define capacity?
Whether or not your hours. Are you going to have extended hours where one doctor 1 day a week is going to stay open till 7 to accommodate dual income families? You have things like that. But the next step in after you do your capacity is the revenue generation. Now, a very quick and dirty way to do this is to take your total revenue for the year, divide it by the number of encounters that you had, and then you simply have revenue per encounter. That is really the quick and dirty. And as people who know me will find out, I tend to be a little too granular. But we're going to take that a next step further. What we're going to do is the practices need to determine how many patients they saw by payer type. How many patients did they see that were Medicaid? How many were Blue Cross? How many were Aetna? And that allows you the ability to more effectively gauge where your revenue is coming from and identify the fact that if Blue Cross were to become lose their market edge and it shifts to Aetna over a period of time, well, what's the impact going to be? And so very effective budgeting takes into consideration not just your capacity, but at what price and what revenue you're going to generate for each of those classes of encounters. It sounds really complicated, but it's not. It just takes practice.
Do you have anything to add there, Chip, to the reimbursement or revenue per encounter, like knowing how much you're going to be getting per patient?
No, I think that's a huge thing. For me, it's one of the holy grails. I think you can actually learn or know enough about a practice to start giving them advice with only 2 or 3 benchmarks. I mean, yes, you have to drill into things, but at the top of the list for me is what I call revenue per visit. If I've got a practice generating $100 a visit versus $130 versus $70, that tells me so much about what's happening. It tells me whether they have room to grow, tells me whether they're effectively managed. I mean, if I have a practice telling me they make $150 a visit, I feel very differently about them seeing 10 or 15 or 18 kids a day versus someone who's making, you know, $100 a visit and seeing 10 or 15 or 18 kids a day. Those are 2 very, very different practices with very different revenues, you know, with different sides of that that balance sheet.
So when you guys do this revenue per encounter, one of the questions that I always have is whether we should include all encounters from hospital visits to just simply immunization or like nurse visits with flu shots, or should we keep it to you know, the office visits and wellness visits?
You know, Brandon, that's a really good question, and that comes up, it seems, every budget cycle. I tend to be in favor of being a little bit conservative. While in some states, the vaccines are paid for by the state, and you're simply getting a reimbursement on the administration fee, that can be a substantial amount of money. At some point, you need to feel comfortable that when you're building a budget, you want it to be accurate, but you want to give yourself some cushion. And that cushion is that you only count the visits in the office and consider the hospital sort of extra money. Because when it comes down to budgeting and you start looking at expenses, there's simply not much expense related to hospital charges.
Okay.
So let that sort of be your cushion as you make the budget, and it just sort of gives you a little bit of breathing room, if you will.
All right. So what about like the flu season? Like, it could increase. It could, by double our patient count on a really good, month that we immunize everybody. And then, so how do you factor that?
Well, you're also going to have increase in cost. So if you're providing vaccines out of your private inventory, your costs are going to go up during those months as well. You could possibly, if you're going to have a flu clinic, flu shot clinic for after hours, you're going to have overtime. You're going to have some scenarios like that. And so I think that's why it's really important, because we do have two big seasons in pediatrics. One is July and August checkup time. And then I sort of roll the September, October, that's sort of a little blip on the radar. And then you have your January to March when the kids are getting getting the cruds and everything else. So like I said earlier, we'll kind of go back a little bit and look at that your capacity issue. I know some practices where they have what you call a regular schedule. Then for the period of July through and August, they have a checkup template. And then in the wintertime, it's more sick visit and so forth. So that's why it's really important that when you're doing budgeting, you do it on a month-to-month basis. I would say maybe by the quarter, but that's getting a little dicey. But that's why it's so important in pediatrics, because there is so much seasonality in what goes on. You really need to look at your budget and plan to do it on a monthly basis to account for not only the increase in reimbursement overall, but your increase in overhead.
All right. So you're putting in, so now it looks like you transitioned into expenses, because you were talking about the added cost depending on the month. So one of the issues that I always struggle with is that, for example, if we're going to have our flu season, there's going to be increased costs during, the month of September, October, let's say, that we're starting to vaccinate everybody. But those costs, I won't have to pay for the vaccines 2 or 3 maybe later months afterwards. So when you do budgeting on a monthly basis, then how do you account for that sort of thing? Because you're like, well, I gave the immunization in September, but I don't have to pay for it until, I don't know, January.
That's a good point, and that's why you have to decide before you do the budget. Am I going to follow my patient expense as to when the expense occurred, or am I going to follow when the cash leaves the practice? And so that's why it's really important that these types of things be discussed before you talk about budgeting. I would tend to favor, at the end of the day, my ability to run a practice is based on how much money is in the bank. And I think Brandon brings up an excellent point in that, yes, you incurred the expense in September, but you're not paying it until November, what have you. But I believe you should follow the cash and watch the cash flow. Because at the end of the day, cash is king. And that is the most important thing for the practice. So I think that...
Could you talk into my good ear? Because I just thought that you said cash is king. Did I hear you right? Then talking to my good ear again.
Yes, cash is king. And
Holy
that's
Paul,
why revenue...
Paul, I think you're breaking... Paul, I don't think we've ever heard this before. This is unbelievable. Cash is king? So what about this whole notion of us taking care of kids? Please, explain this to me.
That's why when you're doing budgeting, with revenue.
Excellent, excellent. Of course, I was being very sarcastic and facetious because that's been my motto, for years. Of course, Chip, you seem to be a little bit quiet there. Either you don't have anything to say, or which I doubt it.
I'm letting our
shy by our guest here
have a moment, because as you know, I don't shut up once I start. I agree with everything Paul says. I do approach it.
There's one thing that you don't agree. There's one thing that you do not agree with Paul's approach.
Okay, well there is one thing I'll do differently, or I'll reframe one aspect of his approach. I'm going back to your original question. Should you break it down by sick visits versus well visits and so forth? Now, I work for a company who can hand that data to our clients on a silver platter, so I love to look at that data. But even though I have it at my fingertips, I often don't start there. The reason I say that is when the people listening to this blog or this podcast or whatever, there are two types of practices. the majority of them, because we're attracting SOAPM-type people, are fairly sophisticated practices who can understand not only what the data means when I can compare a well visit to a sick visit revenue-wise, but also what the implications of that data are. And for those practices, I do look at it that way. However, the overwhelming majority of pediatric practices can barely get their heads around the impact or the implications of a revenue per visit analysis in the first place. Just doing what Paul said, breaking down your revenue per visit by payer, that's revolutionary for most practices. So I start there. And I depend on the law of averages to say that the volume of patients you see in the hospital is even among your different payers. There could absolutely be exceptions to that, all right, but not usually or not by much. And so I say, look, even though that hospital revenue or those hospital payments may be icing, Paul's absolutely right, the margin on your hospital visits is potentially a lot higher than it is for your office visits. I'd say you could say that's like capitation, or that's like pay for performance bonuses. I just lump it all in together because at the end of the day, it's not like, except for with a really sophisticated practice, it's not like you're going to try to generate more hospital visits for this payer, or you're going to try to generate more sick visits for that payer. The only part of your visits you can control are your well visits, and then after that, once you maximize that, all you can do is you drop a payer. I don't know if I'm making much sense, but you got to start. The big picture has to add up, and the big picture has to make sense before you even drill down to that second layer. Now, I live in that second layer all the time, but for most practices listening to this, if you can't generate your true revenue per visit for 391 visits versus 394 visits, don't worry. Do exactly what Paul said. Take your total revenue for the year and divide it by your total visits and do it on a payer-by-payer basis, and that gives you more data than the payers expect you to have when they work with you anyway. You know, Paul, am I contradicting
I do want to add one point. You need to make sure that you have the ability to not just look at only the insurance payment. You also need to factor in the co-payment and deductible.
You're absolutely. Yeah, I agree 100%.
Your math off.
Yep.
All right, well, good that you made that point, because I'm assuming everything. I'm assuming the full amount, not just the insurance payment, but I'm just saying, you know, at the end of the day, what is it that we got for this whole service? I don't really care where it came from, quite frankly, for this purposes, of course.
No, that's absolutely right, because whether it's an HSA, a $50 copay, huge deductible, 80/20, private insurance, it doesn't matter. At the end of the day, this patient came in, had this visit, and you need to know
how much did I get paid for in total for that visit. All right. So we talked about capacity, we talked about reimbursement, and then we kind of briefly talked a little bit about expenses. Is there anything else to add in terms of the expenses on what to look for? Here's my thing about expenses. It seems like I mean, you have to know what they are, but if there's not any, you know, adding new doctors, opening a new office, I mean, the expenses for the most part, you know, they might go up, of course, but for the most part, they're pretty much the same. So this is kind of what I do, and I'm kind of leaping ahead a little bit here. So what I do is I figure out what what we spent. Well, actually, this kind of brings up another point. Before I jump into mine, two things that I want to address: the expenses, and I'll leave this throw it out to both of you. One, and two, how much do we need to focus on history to help us out for determining our expenses and even the revenue, for that matter?
Well, Paul, you go first.
All right. Well, Brandon, I'm going to ask you a question first. Do you pay your staff biweekly?
Yes.
Okay. What month this year are you paying them 3 times?
Well, I just divide it by 26, and that's how I don't necessarily know what month that falls in. So I just divide it by 26 and know that there's 26 payments.
Well, if the world just saw it, I think I made Brandon squirm a little bit.
Yeah, the answer is I don't know what month is three times. I don't know. I just divide it by 26.
When you're budgeting, the single largest expense is going to be labor cost. And you need to know, number one, the first thing, in what 2 months am I paying the staff 3 times?
All right.
In those 2 months, your single largest expense is 50% higher. And you need to plan for that. So that's sort of the rationale and looking at expenses and being able to, that's the first thing I would look for. Is when is my single largest expense going to occur? History is really good. History is very important. That's why you'll see if you go onto the internet and you type in the word business intelligence, you'll be astounded as to what you find. I mean, but there's a reason for that. And what big companies and $100 million healthcare organizations have realized is that for the most part, by human nature, unless there is a significant change, such as a new practice, new physicians joining, history is a barometer of what's going to occur over the next year. And so that's why it's extremely valuable that you don't simply every year get rid of last year's data related to QuickBooks. It has value as a guide to let you know what to expect over the next year.
All right, Chip, anything about expenses that you want to add?
I'm going to agree with Paul, and what I'm going to say is this. If you're not budgeting well, your history will repeat itself, usually with poor consequences.
Oh, excellent.
And that's and one thing is, you know, if you had a great year last year, and you want to repeat it, that's one thing. If you had an okay year last year and you don't want to repeat it, you have to look at what happened last year in order to avoid in order to avoid a problem. And one big budgeting tip that I have is I've seen practices do this. It's not as common a problem as it used to be, but it does still happen. Where a lot of practices, when they go to set their budgets, they look at all the expenses that they might incur. Their staff, their rent, their immunizations, malpractice, the whole 9 yards, and they fail to include their own income as part of the budget. So, like Brandon, let's say you're a 3-doctor practice. Okay, I'm making up a number, and they look at yeah, okay, just make up a number. And so I say, so you go to make your budget, and you're like, boy, to run this practice, I own this practice. I'm one of the doctors. I know with all my expenses, it's going to be $300,000 for me to keep this practice open. And they do all sorts of things to sort of target that amount because what they say is, and I get to keep everything that's over $300,000. The problem with that is, if you don't budget to have at least the same amount of money for your own income, you might easily whiff and be short. When you go to set your budget, put your expected owner's income into your budget so that's your target. So if you took home, if you're the owner physician and you took home $200,000 last year, you need to add that $200,000 to your budget or you're not going to see it. Now you know, normally I would now turn to Paul and say, hey Paul, what do you think? And I don't, oh no, he is there. Okay, it looked like he was missing. I'm on my screen right here. I was afraid he was missing. So Paul,
I think it's really important. You know, like I said before, let's go back to the beginning when we first started talking. You need to sort of depersonalize the process and think of yourself as a machine. As an individual and as a physician, you may be a father, an uncle, a grandfather, and a physician, but in terms from the entity itself, you are simply a machine. And you need to pay for that machine, your experience, your ability to provide care, and all those things. And I can't echo stronger sentiment in support of what Chip is saying, is that you need to budget for it. Because if it's not in the budget, why? Why not put it in there? Because that is what you're trying to attain, which is an adequate physician compensation, and the only way to get there to effectively plan for it. It's like being a coach of a football team, and they say, okay, with this play, the next 4 plays are going to get us to the 2-yard line. And then you walk away. Well, what's going to get you to the touchdown?
I think that's an excellent analogy.
Yeah, you have to see it through. So, you know, I was a little bit nervous about this whole, with the exception of asking me how many months, how many pay periods or what are the 2 months that have 3 pay periods, rather. I was a little bit apprehensive about this because it's like, man, I'm going to show a lot of things that I'm not doing well. However, I'll explain my little process here, and I think that I'm already doing a lot of the things. And one of the reasons that I want to share my process is because I think that I've simplified it enough, although I'm not going to say that it's good. I think there's lots of room for improvement. But I think that this would be perhaps a good step in for practices to kind of focus in. So I want to give you guys my approach, and then perhaps you can give me your 2 cents about it. But before I do that, Chip, I didn't start the timer. Where are we at? I want to keep this.
I was going to tell you that I want you to talk about your approach right now, and then we're gonna roll it into the.
We're gonna wrap it up. Okay, I'll wrap it up for the video. That's what I thought. Okay. So one of the things that I do is my expenses. I take a look at the expenses my last year. So I do look at history. I look at the expenses, and then I look at each line each line, and I figure out how much more I think I should spend in each one of those categories. So if I anticipate that we're going to be spending more advertising, it's not really scientific. I just said, okay, you spend 20 grand, 15 grand. I'm like, this year we'll maybe put in another 10 grand in there. And things like that. And I do that with some of the other things. If we're going to hire a new person, then I'll put that full amount in there. At the very end, I have this lump sum of money, and I multiply that by 12, and have a good idea on how much the entire month is going to be. I also know how much is my average revenue per encounter. So let's go say that is $130, let's say. So by the way, I do include the doctor's salary in that. So basically, it's everything in there. Everything that I write a check for is in this total number. And so basically, I divide my total number. Okay. Well, first I divide my total number by average encounter, and that's why I was asking about, should I include nurse visits in there? Should I include? And I do. Everything is in there, so I get one lump sum of like $130, whatever it is. I don't know. And I include immunizations, administration, the whole shebang. I divide that by my total number that I anticipate of spending, and there I know how many patients I have to see at the very least to reach that number. I sometimes go further, and I say I divide that by my either 52 weeks, and then I do that by how many days the practice is open. So it's not 365 days. I think it's something like 220 days is something that we're open. I account for maybe a few snow days in there. And then I basically divide that in that. I do very conservative. And then I know that number comes out to, let's say, in our practice, around the 10,000 encounters a year. So then I break it down even further. And so I have a good number of what my basic number is. And then on top of that, I'm like, I think we should do a little bit better. So I want to have a little bit more money at the end of the year, and then I'll get some years I'll be very bullish, other years I'll be very bearish, and then sometimes I'll say, man, we can put in another 200 grand in this place, and then I add that to my number, and then I do the same formula, and then I know how much that number. And then once I see, like, can we really see 60 patients a day every single day? Well, maybe that's not the case, and I start playing with that. And then basically I have a goal. I say, guys, this is what our daily patient counter is at least $130. If we can do 250, well, guess what? We don't have to see this number. We can see less. If we're seeing a lot more Medicaid and we're only averaging $90 a visit, then guess what? We need to see more patients. And that's kind of how we play it. And I do this kind of depending on the need. Like if we're banking with a lot of patients, then I don't worry so much. If we are not seeing our numbers, then I start to worry, and then I look at it on a month. Sometimes I'll just focus on this month and then break it down by the week, break it down by the day, and like sometimes throughout the year, I'm over this number the entire time. Like we need to hit this number. We need to hit this daily patient. And that's basically the extent in a very small period of time of how I've focused my budgeting / expenses / capacity / reimbursement. I think that I cover all those things in there. Now I can get a lot better. I'm not very good at anticipating expenses. I look at my bank account and I'm like, yeah, can we do more advertising? No, there's money in there. Let's go for it. Can we hire somebody? Yeah, I think we can. That just means we've got to see 2 more patients a day now. That's kind of how I approach it. So I think that I can get better at that, and that's one of my focuses for this year. But that's all I have. I'm going to cut it to this point right here, and then perhaps you guys can grill me on the other side of our podcast.